Good afternoon, ladies and gentlemen, and welcome to the Intercede Group preliminary results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Klaas van der List, CEO, and Andy Walker, CFO from Intercede Group. Good afternoon to you both.
Good afternoon, Mark, and indeed, good afternoon, everyone. As Mark said, my name is Klaas. I'm the CEO for Intercede, and I'd like to welcome both existing investors as well as potential new private investors to this session. Andy is joining me as the CFO. It's the second meeting on our the IMC platform. We look forward to providing you with an update and indeed your feedback. It's very much us presenting to you, but we look forward to receiving your questions. And as Mark has indicated, we'll try and answer as many as we can. So without further ado, let's start with full year results for 2021. One or two hygiene slides, clearly pretty faces before COVID. So what are we going to talk about today? Quick status update on COVID. I think nowadays we can't do without providing you with a quick update because it does impact the majority of the business out there. For those of you who are new to Intercede, I'll provide a quick introduction. We'll then do a progress report. We'll talk about some of these second half initiatives. I'm going to pass on to Andy for full year results. We'll then have a look at the market from two perspectives: A, market drivers, and B, market size. Market size is particularly relevant in the current context as we're branching out of our traditional space and moving into a much larger addressable market. We then move on to outlook. FinCap is back with a 2-year forecast. We'll provide some color on that. And then the last 2 points is very much a little bit of focus areas for the next 6 to 12 months and providing you with a quick summary. So COVID-wise, operationally, it's been pretty much business as usual. We had everybody at home way before lockdown in March 2020, both here in the UK as well as in the US. We didn't furlough anybody. We didn't have any redundancies, no bounce back loans, no shorter working weeks, no pay cuts, no nothing. If anything, we've added a few heads throughout the period. Operationally, it's worked really, really well. All client projects and roadmap deliverables have been met. As you sure will recognize with many businesses out there, we have plenty of deliverables throughout any given period, and particularly so when we hit end of March. So all the deliverables that were revenue generating were delivered in good time. Clearly, we need to look after the staff. We need to look after the premises. We've done all our risk assessments. We are ready to move back into the offices. But right now, realistically, 90% of our staff is working remotely and is working remotely successfully. I don't see any reason why we should go back this side of summer. A lot of our staff have got children, school-going children. So with holidays coming up, we might just as well look at the September period and indeed see what's happening out in the market. We're clearly reliant on government instructions, both here as well as in the US. And if there's any other spikes happening in weeks or months to come, then with everybody at home, we clearly have a lower risk profile. From a sales perspective, two sides of the coin. US has very much transacted as normally. We've seen revenues in the US up by 14%, so we're pleased with that. However, rest of the world, and then particularly continental Europe and Middle East, have been far more affected. As I'm sure you'll recognize, a lot of those countries have been in heavy lockdown, including my home country, the Netherlands. But this has been prevalent throughout continental Europe with Germany, France, Spain, Czech Republic, the Nordics. Everything has been pretty much in shutdown mode. So those countries have been very much focused on public health rather than on identity schemes and introducing strong authentication. So Pipeline's definitely not gone away. Pipeline's still continuing to develop and indeed growing. A lot of these opportunities that haven't materialized over the last 12 months are still there. We are just waiting for those countries to go back to some kind of normal operating procedures, and we're pretty confident that the projects that are still there will be reactivated. Our partner activity has been very much increasing. I'll provide a bit more color on that throughout the presentation. And normally when we hit April and May, our coffers are pretty empty because we've tried to squeeze everything into March, but we've actually had a pretty good start to the year. April and May have been very encouraging, and we're working very hard to get June into the same kind of pattern. And then final point here is we just launched in April our latest release, V12. It's quite a major upgrade in terms of functionality, and we're actually seeing a lot of uptake in client base who want to upgrade, take advantage of net new functionality onto the V12 platform, and we're actually expecting good services revenues on the back of that as we assist our clients throughout these upgrades. So that's a COVID update. So what do we do? Mighty is a software platform. We're headquartered in Lutterworth with offices in Lutterworth and Reston, just outside of Washington, and our software, MyID, secures identities, and they are identities, digital identities for governments, large enterprises, military, police, etc. And basically what we enable those employees, citizens to do to get access to data systems, networks, whenever they need it. We do that across a large spectrum of vertical markets, traditionally very heavily government, federal focused and closely associated with the defense and aerospace sector. But over the last 3 to 5 years, we've seen more and more interest from the enterprise market. So you see banking, finance, healthcare, and manufacturing and industry on there as vertical sectors that our platform is very much relevant for. So what's the problem we actually solve? Organizations, whether they're governments or enterprises, they want to protect themselves against data breach, and the reliance on passwords is very much the #1 cause of data breach. And when companies are then starting to use multi-factor authentication, two-factor authentication, or strong authentication, that is the best way to protect against data breach. Passwords is a problem, as you can see in some of the data here, but there's also a good starting point yesterday in the Washington Post, where the CEO from the Colonial Pipeline was hauled over the red coals by the Senate and was asked to explain what actually happened there. And statements were made that basic security was lacking, but he is heard and saying it was a complicated password, and that's the problem. The problem is the password. Passwords are simply not secure, and they cause breaches, account takeovers, ransomware attacks, etc. So what's the solution? The area where we pitch in is then indeed the strong authentication factor, and the strongest form of authentication is the use of a digital identity. A digital identity is a private key on a secure device, and a secure device can be a smart card, a digital ID card, it can be a mobile device, it can be a virtual smart card, it can be a laptop, it can be pretty much anything you'd like to think on USB devices. And a digital identity is a private key, and you combine that private key with a second factor, and that second factor is either a PIN, it's a fingerprint, it could be a Face ID. And what MyID does, it makes deploying those digital identities simple, secure, and scalable. So we can do it very fast. We can do it with full audit trails, and definitely in the US market, that's highly relevant. We've done this for the last 20 years, and because of the area where we're playing, digital identity is very much the top end of the market. You'll see that a small company in Lutterworth has actually got a very impressive client base. And when I first joined the company just over 3 years ago, I thought, yeah, interesting. Loads of interesting logos, but what's actually real? Because when you see Lockheed, when you see Boeing, when you see BASF, when you see Wells Fargo, or Department of State, or the FAA, or the SAA, you think, okay, are they just logos, or are they real? Well, it's actually pretty real stuff here, because these companies use anything from tens of thousands of licenses to hundreds of thousands of licenses. And when you take examples like TSA, The Transport Workers Association in the US, they use millions of licenses. Same for a citizen program we're running for Q8. Again, it covers the entire citizen population. It's for 4.5 million plus. So this is all pretty real stuff. And we have great credibility in this space. So digital identities is the area we play in. We have a platform that's very much proven out in the market. It's a platform that's very much recognized by the top end part of the industry. So that leads me quite nicely onto progress reports. When I joined 3 years ago, the task from the board was get us back to sustainable revenue growth and profitability. This was on the back of a couple of years of heavy loss making, heavy cash burn, and probably a lack of direction. So 3 years later, we've had 3 years of revenue growth, we've had 3 years of profitability, we've had 3 years of cash generation. Again, if I go back to the early stages, we were down to our last £2 million in cash, and the majority of the institutions were saying, hey, Klaas, you're going to come to market soon because you're going to run out. And I had a plan, we worked on the plan, we executed the plan, and 3 years later, reporting at the end of March, we're sitting on £8 million plus, and that's further improving. So we are in good shape. The other part, which is good about the business, we have a very strong recurring revenue stream through our support and maintenance. All our clients are reliant on their support and maintenance. They renew year on year on year on year. This is very sticky business. We have clients who've renewed for 10, 15, 20 years plus. I'm also highlighting the repeatable revenue stream here. Repeatable is very much our professional services and development work we do for both existing customers and new customers. It's very easy to forecast at 1 to 2 million per year. When combining those two together, it pretty much covers our costs. So we think we're in good shape. For those of you who have followed us before, you would have been aware we had a £5 million convertible loan note hanging out there with maturity in December 2021. So the first 2 years, we worked really hard on that cash pile to make sure that we could issue a call notice. We did that in February, and 12 out of the 13 loan note holders converted into shares, which is good. And they've also resulted in net new institutions coming on board. So we are now debt free. We've got a clean balance sheet, and we've still got a very good cash reserve. So that's promising to take the business to the next phase. Clearly, we're pushing hard on the sales and marketing side. I talked about US transacting very normally, if not ahead of where we thought we would be. Rest of world still very tight, but we are still seeing pipeline growth, and that pipeline growth is all driven through channel. 3 years ago, we made a very deliberate choice to develop a channel model. Anybody who's done this before knows that building out channel takes time. We launched our formal program in February last year, a month before COVID. But despite COVID, we've made incredibly good progress in both existing regions where we're active, rekindling existing relationships, as well as signing new relationships. The other part on the sales and marketing is very much driven on our customer first approach. I'll provide a bit more detail as we carry on. From a factory perspective, operationally, we are still spending a lot of time on innovation and R&D. We're spending close to £3 million per annum. And earlier referred on to the launch of V12, which now includes PKI, our traditional heartland, as well as Fido, and I'll provide more detail on that. Clearly, we couldn't do this without a group of motivated staff. Staff motivation 3 years ago was not good at all. Attrition was high. In those days, it actually worked well because it got our cost base down and got us back to profitability in year one. But since then, we've really worked hard to make sure that we're investing a lot of time and effort in staff satisfaction. We are running an annual EMPS score. A couple of years ago, it was very heavily negative. Last year, it was very sensibly positive. I'm hopeful that we can actually push that upwards even further. Attrition is very low at the moment. Over the last 12 months, we've seen no attrition. Attrition is actually zero. So that's a little bit about the progress we've made. What's actually behind this? We've got a very clear strategy. Our strategy is built around 5 C's. Please ignore the 6th C in the bottom right-hand corner for the time being. But the 5 C's internally as well as externally is very easy to communicate against. I've taken from day one a very clear approach that it's all about colleagues. If we get the colleagues happy, if we can get them safe, particularly in the COVID environment, then the rest will start to happen. So we've invested heavily in the staff side. 3 years ago, they hadn't seen any pay reviews for many years. We did a deal with the staff and said, look, help us to deliver the year. If we deliver the year successfully, we reintroduced pay reviews. We were profitable after year one, which was a year ahead of where we expected to be. And I said, look, we really need to recognize the hard work that everybody has put in here. So we started with non-contractual bonus. 90% of our staff do not have a contractual bonus. So to hand out bonuses at the end of the year for a job well done has been very well recognized. We've done this for the 3rd year running now, and staff like the fact that, if they help us to deliver the numbers, they get part of that recognition. So first C, colleagues. Second C, code. I'm a firm believer is that we write the best code in our part of the industry. Once our platform is in, once MyID is up and running in the customer, this software works. We see very few tickets coming into the business. Our support team is relatively small. If we get a handful of P1s is platform down in any 12-month period, it's a lot. Yeah. And then when we start investigating what's actually causing a platform outage, 9 times out of 10, it's got nothing to do with MyID as a platform, but it's the third-party dependencies we have. For instance, a client runs certificates. Those certificates are valid maybe for a year, 2 years, 3 years. They expire. The clients haven't renewed the certificates. Well, yeah, that's going to cause an issue for MyID, but it doesn't mean that MyID as a platform isn't working. So this is really solid code. Yeah. Investment already talked about the R&D, and with our latest release, we have functionality out there that is definitely market leading. Nobody offers the functionality where PKI and Fido are combined in the same credential management solution. So code, colleagues, customers. As I said before, we have a customer base to die for. That customer base is incredibly loyal, and there is very little attrition when it comes to renewals. Our attrition on renewals is significantly below 5%. And that means that these customers keep on renewing, and we have a really good opportunity to continue to build on that revenue going forward. Again, introduction of a customer first strategy 3 years ago is yielded a lot of benefits. We are now actively engaging our clients through the customer advisory board into the roadmap development. 2 years ago and a year ago, well, actually 2 years ago and 3 years ago, we did this face-to-face. Last year, we had to do this virtually. It had an upside, actually, that we had twice the number of attendees on the virtual approach. Clearly we're missing the social element, but actually it works really well in those sessions. We split the clients up in different working groups. We get them to collaborate together as to what they would like to see. They then present back to the wider board, and then we take all the input, and eventually we get customers to rate and rank what they'd like to see in functionality going forward, and we then try to embed that into the roadmap. Customer satisfaction surveys are now being held every year. We have a customer portal for additional support, and about 6 months ago, we've introduced the role of customer success. So we very much want the onboarding of new clients, or when clients are upgrading, we want to make that process as slick as possible. One of the earlier sessions, there was a good description when somebody said, yeah, it probably is a bit like a swan, and under the water, you need to pedal fast, but that's exactly what it is. The director of customer success is about that pedaling underwater to make sure that the customer's got a very smooth transition or introduction into Intercede. Channel is the 4th C. We introduced a channel program February last year. Timing-wise, not great, a month before COVID, but we've actually seen really good progress. There are 2 main pillars into the partner program. One is the technology partnerships. It's those applications, it's those systems, those hardware components that we need to integrate to and with in order to provide an end-to-end solution. The second part of the program is the channel relationships. It's those relationships that are typically priming the contracts they are reselling. So for instance, We announced a deal last year with a new partner called Guidehouse in the US. Guidehouse is the new name for PwC Public Services. They were the prime for a contract win into Department of State, of which we were a key component. So that's a good example of a channel relationship. 90% of our business and new business is now contracted through partners. We want to grow that even further because, with a relatively small sales team, there is only so much global reach we can get. But when we start to make use of technology partners as well as channel relationships, we can actually move much wider. Fifth C is around cash. Cash is looking good, as referred to earlier on. A lot of that cash is generated from operating activities. We retired the CLN. So, we are in a much stronger position than where we started 3 years ago. Community, I think, is an important point that we should not forget. As a company, we have a role to play within the community. We are an employer in Lutterworth. Lutterworth is a relatively small town. We have just over 70 staff there. A lot of those staff have children who go to local schools. And as COVID hit, it was clear that a lot of these schools were not prepared to support the children for remote learning. And then obviously, there was a lot of noise in the press about, disadvantaged families, disadvantaged children who didn't have access to devices. So, this happened also in Lutterworth. So as a company, we decided to donate quite a few new laptops, new Chromebooks, and we had quite a bit of refurbished kit that we could offer into the local community. So in excess of 35 devices were pushed into the local community, into the local schools, and they were very grateful for receiving that. The other thing we do, even now we do when we have very limited presence in the office, is things like the local food bank staff are still collecting the food parcels and submitting those on a weekly basis. So I think as a company, we have a role to play in the wider community. So at this point, I hand over to Andy.
Thank you, Klaas, and I'll provide a high-level summary of the key numbers. So you'll see revenue was 6% up year on year. With a strong end to the year, the order intake was actually 10% up, and we do believe the revenue on the year would have been double-digit as well, had it not been for a couple of factors. The first of which is COVID, as Klaas has already said. Whilst the US was still strong, I can think of a couple of orders that have been delayed as a result of COVID, but still generally has performed well in the US, resulting in a 14% increase in revenues. But as regards the rest of the world, with national lockdowns, then you'd see, if you've looked at our preliminary results announcement, the rest of the world was £500,000 down year on year. And that's the sort of level in previous years as well that we're down. So as a minimum, I would have expected us to have achieved that much better had it not been for COVID. It's also worth referring to currency effect. A large part of our sales are dollar denominated. And with the dollar rate increasing during the year from 120s to the 130s and 140 plus, then particularly in Q4, that's started to have an effect. Year on year, not significant. The impact's less than 100,000 because the average rate for the year actually came out at 129 versus 128 the previous year. But an important factor as we enter the new financial year and as we look at forecasts going forward. Moving on from the revenue, as regards the operating costs, then we've continued to keep tight control. We have maintained a high level and a good level of research and development, resulting in the releases during the year. We have had a couple of increases in headcount. We've taken on a couple of developers during the year, and we have had the pay review that Klaas referred to. But overall, the increase in costs has been restricted to 2%, and that illustrates the operating gearing. With us having a margin, gross margin approaching 100%, then you can see that with revenues being larger than the increase in operating costs, that's resulted in a £400,000 to £500,000 increase in profits at the different levels, and obviously indicates that as things return to normal in markets around the world, the potential for substantially increased profits in future years as we grow the revenue line. Moving on to the cash, as Klaus has already said, very strong performance during the year. Very important for us in steering a course to be able to resolve the convertible early, which we did in February, and that in itself saves us £400,000 worth of interest each year from this year onwards. What that's also done is, this time last year, or in March 2020, we had 4.8 million of cash, but 5 million of convertible. So we were in a net debt position. This year, with 8 million of cash and having removed the 5 million convertible, a substantial, significant turnaround. That's also reflected in our equity, which has improved by 6 million year on year, with the 1.5 million profit for the period you can see there, and also a 4.5 million increase as a result of 12 out of 13 of the loan note holders choosing to convert. So a much stronger balance sheet, and very much signifying the completion of phase 1 of the turnaround and setting the scene for phase 2 and how do we grow the top line. So I will hand you back to Klaus, who will run through the markets and future outlook.
Good, thank you very much, Andy. So 2 views on the market. One's the market drivers and how we position the product into the market. The second slide after this one is about market sizing. So what are the main drivers? Well, as I indicated in the introduction, data breach is good for us. Lots of noise in the press means that we have opportunity to sell into, whether that's Colonial Pipeline, whether that's ransomware, whether that's issues with Marriott Hotel. Our clients try to protect themselves from data breach. So that's good area to start with. The new normal post-COVID, whatever that means, clearly will include some office-based work, some remote working, but it's definitely going to be different from what we're used to. When people are not on their corporate networks, clearly there is a much larger threat factor out there. A lot of people who work remotely are not on VPNs. If you're not on VPNs or the corporate networks, you're far more exposed. So actually, this new normal, this hybrid kind of working is playing well to a proposition like Intercede. Anything to do with cloud, whether it's public cloud, private cloud, there are always questions around security, data protection, and compliance. It's an area we're very well positioned for. Strong authentication is the area clearly we play in. It's the area that's coming up. Joe Biden announced an executive order, and it was one of the questions that was posted early on as well as to what the impact of that is. It's a good sign for us, because basically what that executive order mandates is very much a zero trust approach, and they specifically are calling out multi-factor authentication. So it's a good sign for us in the market. It also helps on the regulatory side, particularly in markets that are heavily driven by regulation. US is a good example of that, where we clearly see a lot of our business happening. So there are some really good drivers in the market. We then move to the right-hand side of the slide. We have a platform. There are 3 versions of that platform. Enterprise is exactly what it says on the tin. We position in the vertical enterprise markets. MyD PIV or PIV is a version of the platform that's been specifically developed to comply with federal government in the US and the associated defense and aerospace industry. And then mid last year, we introduced a lower end mid-market version of the product called MyD Professional. It's in effect a scaled down version of enterprise, but it's all the same code under the bonnet. So realistically, you're looking at one platform here with 3 different variants. So when we look at the market size, and it's also, for those who are not too familiar with us, gives you a bit of a feel of where the company has traditionally positioned and where we are now positioning, because it's a big step forward. So some of you may be familiar with the Authentication Pyramid that we've presented for quite a few years now. When you start at the bottom of the pyramid with passwords, it's not particularly secure. You move up that pyramid to one-time passwords, sometimes through SMS, sometimes through tokens like RSA tokens we used to have, or even through mobile one-time passwords. Yes, it's stronger than the simple password, but if you take one-time passwords through SMS, it's still easily breached. There are plenty of examples out there, and there is plenty of noise on the internet available that, a lot of people are still using it. A lot of companies are using it because it's easy to use and it's low cost to use, but it's not particularly safe. There are a lot of breaches relating to the use of one-time passwords through SMS. But as you move up that pyramid, it becomes cryptographic. Fido is cryptographic. PKI is cryptographic. It then starts to become person-bound. That's the area where we're playing in. So the strongest form of authentication is in the top of that pyramid, which is where Intercede has got its experience for the last 20 years. However, there is also a drawback on the shape and the size of that pyramid. Whilst the top of that pyramid is really, really good, it gives us great experience, and we have really strong credibility from the client base. When you look down, you think, actually, the size below us is actually significantly bigger than the market we're playing in. And that's also reflected on the right-hand side. If you look at the size of the credential management solution market, it's roughly $1 billion, which in itself is still a very sensible market. But as you'll see on the next slide, when you start coming down that pyramid, the market size suddenly increases tenfold. Growth in this market, in our core PKI market, in the core CMS market, is still good. It's still growing double digit going forward. But 18, 20 months ago, we said, look, we need to find a way to breaking out of our traditional space. We like the traditional space because we know this inside out. We have great referenceability. We have lots of sticky revenue and customers. But at the same time, what are the other areas we can address here? So we had lots of dialogue with analysts in the market. We had lots of dialogue with existing customers and prospects. And in effect, we came to the conclusion that we should come down that pyramid in order to eat into a much larger target account market. So, sorry, I'm using the wrong key here. So from April onwards this year, we've introduced V12. V12 is including PKI, Fido, and mobile ID. What is Fido? Fido is faster identity online. It's a cryptographic form of strong authentication that was originally designed to help consumers like you and I at home. It's fairly well used in the market. It's backed by the big boys. You've got Microsoft behind this, you've got Google behind it, you've got Facebook behind it, you've got Apple behind it, but it started its life on the consumer side. And Fido is based on the USB token that's got a credential on it. And that credential makes sure that when you log in to your MacBook or your laptop at home, that it's you logging in, and it's a really good, seamless user experience. It's been really well designed. What's actually happened over the last couple of years is that standard, that Fido standard, has found its entry into the enterprise market. So we now see parts in our customer base coming up with use cases for Fido, but there is a challenge. Fido was never designed to be operated in the enterprise space because it was designed for consumers like Andy and I at home. I've got 2 boys, a wife at home. I can buy 4 tokens, and we've each got one. I can label them 1, 2, 3, and 4, and I know who's got which token, and it's going to be relatively straightforward to manage. Now think about a scenario where an enterprise has got 5,000, 10,000 staff, has to acquire 5,000, 10,000 Fido tokens, and suddenly this becomes a nightmare. This becomes a real nightmare to manage. In PKI, that's all managed because PKI was set up to manage the credentials. So we've worked really, really hard over the last 12 to 15 months and say, hey, can we bring Fido into the platform so we can manage PKI as well as Fido through a single pane of glass? Through one interface, our clients can manage different tokens with different strength for different use cases. PKI is really strong to be used within your own organization, but doesn't really work in the supply chain, doesn't really work well if you have lots of contractors. You take the defense and aerospace, you take the federal markets, government markets in the US, they have loads of contractors in there, and PKI just isn't designed for that kind of use case. But Fido works really, really well. So we've added Fido and mobile authentication, mobile ID to the MyID platform. When we then look at the market we start to play in, we are suddenly into the much wider multi-factor authentication market. It's roughly 10 times bigger than the CMS market. If we take roughly 1 billion and 10 billion as a starting point, it's a factor 10 bigger. I am not saying that we will address the entire MFA market, but what we are strongly convinced of, that we are now into a market that's 3 to 4 times bigger than the market we've traditionally been in. And it's not just, from the market data. Also, when you look at the adoption of Fido into the enterprise world, you suddenly start seeing the analysts like Gartner jumping onto this bandwagon and say, hey, whilst adoption rates at the moment are still relatively low, over the next 4 or 5 years, we really see strong growth happening going forward. So for 20 years, we've been operating in the top end of that pyramid in the PKI field, but it is very much a niche kind of play. It probably also explains why we've never been really capable of breaking out. With V12, we're coming down the pyramid, moving into a much bigger market, target account market, and for the next 12 to 24 months, we'll drive that new version very, very hard into the market. So that's a little bit of background on the drivers into the market that are still very much there, and if anything, are improving, and the market space that we've now got available with V12 is significantly bigger than where we were before. So ThinkCap puts a new 2-year forecast out there. Our aim is to drive double-digit growth based on constant currency. As Andy has already indicated, there is a little bit of a headwind out there because the pound, since concluding on Brexit, has materially strengthened against the dollar. But when we take our numbers, FY21, which was at rate 129, we restate the same number at 140. It then drops to 210.50. And then put our forecast out in the market. We're on double-digit growth, and we're confident that we can drive those numbers into the market. So already talked about, we have very high recurring repeatable revenue element. It's 60% plus of the business. Just our support and maintenance is just north of 6 million, and then we have this repeatable professional services stack sitting on top of that, which pretty much covers our costs. Talking about the organic growth on the next slide, I'll provide a bit more color on our inorganic approach. And Andy has already said, we have high operational gearing. When we get the licenses through with extremely high margin, a lot of that drops straight through to the bottom line. So where does it leave us for the next 6 to 12 months? We clearly need to prepare for a post-COVID era. We're very much ready for this. We've been well practiced. We look forward to the markets opening up, but at the same time, we show a degree of caution, particularly still with continental Europe, because we're not completely convinced that market will open up in the next 6 months. However, at the same time, the US market is performing incredibly well, and we see that today. And we have good levels of confidence that as and when the continental European markets start trading again, we are in a really good position. So growth, where's the growth going to come from? Point 1 is extending that addressable market. I talked about V12. I talked about extending the PKI platform into Fido, into mobile authentication. So that's going to give us a much wider addressable space. Second part there is our Connect Partner Program. We're really driving that program very, very hard and wide into the market. We are, developing net new relationships, whether they are technology relationships or reselling relationships. We now see deals coming through that previously we didn't see coming through, and clearly that's paramount for the growth of the business. The third point on this slide is the appointment of a head of corporate development. We want to drive the inorganic side. We want to drive the buy side M&A. Over the next 6 to 8 weeks, we will conclude on defining the M&A landscape that we think is relevant to our business, come up with a clear pipeline of buy-side M&A prospects, and we want to layer that on top of our organic revenue growth and see if we can start accelerating this business. Our pipeline remains strong. We know we can convert that pipeline, and we think we're in a good position. So in summary then, phase 1, 3 years ago was all about business turnaround, repositioning, restructuring, refreshing key hires into the business. I think we have a very credible EMT, executive management team. But we've also made sure we have the next layer down, what I refer to as the OMT, operational management team in the business. From prior experience, I know that once you start doing M&A, it can be very, very disruptive, and it's very easy to lose track of day-to-day activities into the business. But by having this OMT layer into the business, they can run day-to-day activities, like clockwork, and we're confident that they're capable of doing that. Andy has already talked about the loan note, cleaning up the balance sheet, saving 400K in interest payments. Momentum, we talked about momentum market drivers. We talked about momentum with regards to market size, but also as an organization, we've significantly matured. We're in a much better space. We're far more process driven, and we are pretty ready to taking the next leap. We talked about increasing that addressable market. From a go-to-market perspective, I keep coming back to those partners, but those partners are key. On the right-hand side, I'm just giving a few examples of new relationships we've announced, and I'm always suspicious when I see lots of announcements on the internet about partnership A, partnership B, partnership C, because a lot of these partnerships is paper and there's not a lot behind it. We're very, very firm on announcing these partnerships that we actually have deals in the pipeline or we have already completed deals. So Intercede and WhitePoint. WhitePoint is a NASDAQ listed company operating in our space. They actually provide a managed service wrap around MyID. So it's particularly for those companies that may not have all the skills or all the infrastructure to run MyID and the associated components themselves. WhitePoint actually offers that as a complete service wrap, which is really good. We've announced our first deals. There is traction in the market. It's really encouraging to see. The bottom one, Intercede and Aware. Aware, again, is a NASDAQ listed business. Aware is part of our proposition and our solution that we've offered into Department of State through Guidehouse in the deal we announced last year. So again, this is very much real. We're working very, very closely with Aware in other regions, and we're also starting to build up opportunities in Latin America by combining our efforts with Aware and indeed their partners in the space. The middle one is interesting. We announced technology partnership with SailPoint a couple of weeks ago. This is very much driven by the client base. So frequently it's partners who want to partner with somebody else in order to drive downstream revenue. In this case, SailPoint is very, very dominant in the federal space in the US. They are very, very prevalent in lots of federal departments. And it's actually some of those departments, some of those federal departments who have come both to SailPoint and to Intercede and said, look, we're really keen for you guys to collaborate here. Make sure you can integrate those platforms. So I'm hopeful over the next couple of months we can actually make some positive statements on that. So phase one, all about getting the business clean, tidy, ready, profitable, cash generative, good cash pile, good organizational structure, working sales team, marketing is working, factory is working really, really well. We moved on to agile development. We're pretty much into quarterly releases now. Every release is incremental. 4 years ago, it took 12 to 18 months to get a new release to market. We are now releasing pretty much every 3 or 4 months. So what's phase two? Phase two is all about business expansion. We need to get that foot on the accelerator. We need to drive the double-digit growth out there from an organic perspective. But at the same time, we really see good opportunity on the inorganic side. We've seen over the last couple of years, definitely in our core space, the PKI space, there's been market consolidation. Andy and I have had conversations over the last 12 months plus that, once we get this business in the right shape, we could be one of the consolidators here and actually drive incremental revenue and EBITDA into the business. We're also looking at the adjacent areas. Clearly, we've added Fido to the product portfolio. We've added mobile authentication. There are other companies out there that provide similar kind of solutions, but with different kind of functionality. We can start looking at those companies and say, hey, we either build this, we partner, or we buy. And over the next 8 to 10 weeks, we'll provide internally a good view on what these landscapes look like. What's the traditional landscape, PKI landscape? What does the Fido landscape look like? What does the adjacent areas look like, and then we'll come up with a target list for M&A. Final point is, the last 3 years we've been very, very focused on the execution of our model. We were very much challenged in the early stages in April, May, that this company had overpromised, underdelivered for years. So we've worked really, really hard to deliver 6 sensible halves of growth. We've got 3 good years behind us. We want to use that same energy, that same focus into the next period where we want to drive the growth out there. That leads me to conclude. I think, it's been an interesting year. It's been a challenging year from a COVID perspective. I think as a business, we've reacted to it very, very well. We had the technology to make sure that everybody could work safely, securely at home. Our productivity has been good. We've seen continued traction in the US market. There's been some slowdown in continental Europe space, but at the same time, the opportunities are still there. It's a matter of waiting for these markets to relax a little bit. Clearly, I'm following the Netherlands very, very closely. Infection rates are coming down very, very rapidly at the moment, which is good. There's a lot more freedom now. Germany is starting to look better. The Nordics is starting to look better. So we're hopeful in the next 6 months-ish that we'll see increased traction. We saw it last year in May, June, but then, we all know what very quickly happened after the summer. So I am cautious, but at the same time, cautiously optimistic that with vaccinations, running high in many, many countries out there, that, there is going to be more control. So that leads me to the end. We got a list of questions already there. Mark, are you taking over?
Yeah, that's very kind of you, Klaus. Andy, thank you very much indeed for your presentation and updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard, and we will send you an email to notify you when that's ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, we will redirect you for the opportunity to provide feedback in order that the company can better understand your views and expectations. Klaus, obviously, you were very kind. Investors did have the ability to pre-submit questions. You very kindly provided a written response to all of those, and we will, at the end, after we've reviewed the questions that have come through the live event, send those to all the investors on this call, so they'll be able to see the questions that were pre-submitted along with the answers. And perhaps, obviously, I could ask you now to open up that Q&A tab. If I could ask you to read the question, who it's from, and give a response, that'd be absolutely fantastic. Thanks ever so much indeed.
Okay, well, we're going to have a real good go at this. First question is from Ryan. Can you talk a little bit about the competitive landscape when tendering for contracts? Who are the main competitors and what makes you different? Competitive landscape is probably different depending on the geographical market we're tendering in. If it's in the US, there are companies like Xtech, there are companies like Axiat out there are companies like City US that we see in our space. When we tender here in close to home, what we tend to refer to as rest of world, we see companies like VersaSec, we see companies like HID, Active Identity, companies like Nexus, recently acquired by the IN Group in France. So we see a different competitive landscape depending on the region we're in. What makes us different? I think I've tried to highlight that in the presentation. We understand this space really, really well. We've done this 20 years. We've got a client base to die for, and it's very, very referenceable. So we understand PKI as nobody else in this market. We have a client base that's incredibly relevant, is referenceable, and we have a platform that is market leading. I challenge anybody out there to come up with the same, if not better functionality out there, because we don't think it's out there at the moment. So I think we're in a really, really good space. So hopefully, Ryan, that's given you some color. Next question is from Andy. I thought it was actually Andy, my Andy asking, but debt-free cash on the balance sheet, so you seem well placed. What do you see as the greatest risk and opportunity moving forward? That's an interesting question. I'd still take COVID as the biggest risk. You've heard from Andy that our rest of world has been impacted by COVID. Those markets haven't really transacted. With 500-600K down on rest of world. If those markets don't open up, we'll probably see very, very flat business in rest of world. So I think there's a risk. I don't see that risk in the US. The US have taken a very different approach under 2 different presidents to COVID, and that market is operating like normally. Opportunity, maybe COVID is also the opportunity here, Andy, in as far as if the continental European markets actually open up faster than our more pessimistic view that it may take a little bit longer, we might see some acceleration, which may give us some net new opportunities. So COVID probably plays on both sides here. Simon, what's the normal sales cycle from pitching to deploying the solution with a customer? I guess once the technology, they are very sticking, which reinforces the importance of what it does. Again, there is a wide range here. When we tender for the large federal government defense and aerospace programs, you could be tendering for a year, 2 years. National ID schemes like we've got in Kuwait, they tend to be long, drawn-out processes. However, we've worked really, really hard to make ourselves far more relevant for the enterprise space. We've also introduced MyD Professional as a mid-market enterprise entry product. And when we look at some of the deals that have come in that kind of space, we're seeing deals coming in 3-4 months, which Andy keeps telling me, Klaas, this is incredibly unusual, but we are starting to see more and more of them. We have a product now that's off the shelf. Customers, we have a good example of a recent win. It's by no means big, but it's an AIM-listed company headquartered from Devon, which is very unusual for us. But they've got strong presence in the US into the aerospace market, inbound inquiry. They've asked for a few demos, which we did. They asked for a test license. We issued a test license. They were very capable. They knew exactly what they were doing. They were testing out virtual smart cards. Within weeks, they were convinced they found the right technology. Within three months, they placed an order. And that's unusual for us. So huge disparity here between the large programs of work, Department of State, which we announced last year, probably been working on it for 2 years plus. But that's $4 million plus. But we're very, very keen to get more momentum in that enterprise space and get these deals moving because, Intercede traditionally has always been accused of big highs, incredible deep lows, and then big highs, deep lows. We want to fill these troughs with enterprise business. And then, for those who have followed us for the last couple of years, you see that we're quite cautious in our approach. We are really trying to get that deal flow moving. So we are very much predictable. When we say we're going to deliver 11, we'll deliver 11 in the market because we have a degree of confidence based on the work we do and the pipeline we have that we can deliver those numbers. So hopefully that's answered that. Nick has got a question. Do you have sales teams globally or just in the UK? Nick, we have 2 sales teams. We have 1 sales team in the UK. We have 1 sales team in Reston, which is just outside of Washington. We are covering, our global approach from those 2 regions. So US is very much driven on the US market, but now also more recently into the Latin American market. And then from the UK, we deal with UK, continental Europe, Asia, Middle East, as well as Africa. So two teams.
What I'd add to that as well is we also have a global reach as a result of the partnerships we've got in place, both long-standing partnerships with some large organizations in our space who themselves have offices throughout the world, but also, as Klaas has said, the Connect Partner Program. We've been successful in setting up partnerships with new people in different continents as well during the year.
And I think Andy is stressing a very important point here. So part of the sales team is partner managers. We have a partner manager here from the rest of the world, but another head in the US. and they are recruiting those partners, they are training those partners, and you get that multiplier effect. We only need one partner manager to train 20, 30, 40 salespeople in a partner's organization. Each partner manager can manage easily between 8 and 10 partners successfully, and more, depending on how complicated the infrastructure on the partner side is. So you really get that multiplier effect out in the market. So we made a very deliberate choice to go down that indirect market route, because we can get more scale, much faster through the partners than we could build up our own. Simon's got a question. Is there any danger that your tech is becoming outdated as new generations of big money VC-backed cloud cyber companies are entering the market, or do they need you as part of their package? I think that second point is very, very relevant. As I indicated on my market drivers slide, that move to the cloud automatically starts asking questions about what level of authentication are you going to apply, or do you have to apply in certain countries. In the US, this is very much specified in rules and regulations that they may start looking at technologies that we're offering. Strong authentication is very, very relevant in the market. It's all nice and well for somebody to say, hey, I've got single sign-on, I am Klaas van der Lies, I'm logging on to the network. Well, yeah, that's all nice and well, but is it me who is physically logging on, or is it somebody who has stolen my credentials and then uses those credentials to get into a third-party organization? This colonial pipeline issue last week is very much the issue. They were using simple passwords. That's the problem. Could anybody do what we do? Andy, how many man years have we invested in the platform?
Well, we've been saying 1,000 plus for quite a few years now. I think we're probably just about ready to revisit that.
Yeah, so for anybody to build this kind of technology, it would take them time. So I think we're pretty confident that our technology is very, very relevant. Also, our move into the Fido space just shows that we can continue to be relevant going forward. Fido is still in early stages. We believe we're very well placed. Alistair, question on the M&A side. Do you have any views at this stage on how acquisitions will be funded? So that's question one. Well, there are multiple answers here. We don't know exactly what we're looking at. We're trying to define that landscape, but ultimately, it would have to be a combination of cash and debt, and a placing or any combination thereof. That's the most likely kind of scenario. We are confident that when we find the right targets and can engage the right targets, we can make stuff happen. I think we have a credible story out there. We have a credible team, and we need to find the right backers at that point. And we definitely hope that we can get support from existing shareholder community as well as the institutions. There's a second question is, can you please talk about the board's experience in M&A? We all know the research about the majority of deals failing. Blimey, you have spoken to Andy too much, Alistair. So, we have an experienced board. We all, if we look at the executive team, we all have 30, 35 years plus experience. I've worked myself into the PE world, where, M&A was the going talk of the day. We were either buying or we were being acquired. So I definitely bring my own experience. We have a number of non-execs on the board, again, who are very experienced in this space, specifically calling out Royston Hogarth, who is a plural non-exec, plays a lot in the private sector, and is very, very used to doing the buy and build kind of approach. So I think we got the right skills into the company. I'd also like to stress that the head of corporate development we have recruited into the business is an ex-investment banker who then subsequently furthered his career in running his own boutique M&A outfit. He has done a lot of the work for the likes of Micro Focus in recent years. He's used to deal crafting. He is actively involved in the strategic discussions and directions of the company at the moment. So we're pretty confident we've got the right skills in the company to make this happen. Martin, what are your plans for the connected devices IoT market? Develop internally, M&A, target, ignore. Yeah, IoT is interesting. Lots of noise around IoT, but are we really the right company to credential your internet connected microwave at home? I am not convinced that's the area we will play in. Taking a serious, more serious view on the question, maybe we revise the question to IIoT, industrial IoT. We've had trials going on this. So thinking about critical infrastructure, we've had trials already out there 3-4, even before I joined, so it's going to be 4 or 5 years ago, on credentialing IP cameras for secure locations. That's interesting because military bases have got lots of security cameras. You want to make sure that they are not being taken over. So IoT is potentially interesting. We continue to look at it. We've had trials out in Florida, but we can't get traction in that space. Whether that's a timing issue, sometimes you're just too early. It's possible. Looking at this a bit broader in relation to M&A, our core heart in the business is all about citizen and employee identity. So that's the thing we know best. You then move a little bit sideways and you get to device identity, IoT identity, maybe worth looking at. We definitely know companies are out there in this space right now. We're defining that landscape. We have different bubbles on our whiteboards where we put companies in. I'm not excluding this at all, but pure IoT, consumer IoT, don't see it. Too complicated. It's too low value from our perspective, and it's too far away from where we've come from. We've come from very heavy duty B2B. So I'm keen that we continue to play on our strengths and find adjacent markets where we can use those strengths. Paul, what pricing power do you have to raise prices in the US to offset Forex headwinds? Yeah, we've definitely adjusted our pricing in the last couple of years, Paul. We need to be careful here, particularly in the US market, in the federal market. All prices are published in the public domain. There are things like GSA schedules where the government forces suppliers like ourselves to publish our price lists. It's an interesting observation, but there is a limit to how far you can push the boat. And believe me, when I joined the business, I said to Andy, I said, we may have to look at our pricing, and we've done so. Whether we can do that again now, question mark, but it's an interesting observation. Who are your major competitors? I think we've answered that question earlier on, so I'm going to skip that one, Bill. Bruno, can you give us a feel of how many companies of a size smaller or similar to Intercede are present in the PKI space? Probably 15 to 20 companies in the real competitor kind of space. Some of those are bigger, some of those are smaller, but I would like to think that we're one of the more dominant players in that space. John, great overview, thank you very much. This question probably overlaps with others you've received, but why would a US government agency, for example, choose to partner with a small company in Lutterworth rather than a US NASDAQ competitor? I like the question because we've asked ourselves this, but at the end of the day, we provide a solution, John, that you would struggle to buy in the US. And even if you can buy it from some of our US competitors, they don't provide a platform that is as advanced and proven out in the market. This small company in Lutterworth has had these, recognizable clients for a long time. They've stuck with the platform. We have companies that have renewed 15, 20 years on the go. They have probably upgraded in those periods 4 or 5 times. So I don't think they can buy the quality of the code, the quality of the expertise we have, and the functionality. I think I'm not trying to be arrogant here. I just think that's very much the driver. Andy, you got anything else to add on that one?
Going back to when we first started making sales in the US, then it shows the importance of the channel partnerships as well. So a lot of these long-standing deployments that Klaas has referred to reflect early partnerships with the likes of RSA Security and VeriSign. So that gave us credibility to enter the market. They were the people actually making the sale to the government agency. And we've built on that with subsequent relationships, and we've built the reputation and awareness of MyID along the way, and reinforce that with the customer advisory boards that we've instituted in the last couple of years, which tend to have a mixture of attendees, both from our partners and from the end customers. And that's quite interesting in that we see both. So it's been a gradual evolution. We need to continue to be market leading in terms of what we do.
Okay, question from Roger. Have you considered raising more capital to enable you to expand sales marketing activity more rapidly? I don't think we need to raise capital in order to do that. I'd much rather, if we need to come to the market to raise capital, use that for acquisition. We have plenty of cash in the business. If we need to fund a sales and marketing expansion, we're actually doubling the size, that is from 1 to 2 on the marketing side, but we do that from within the business. We don't necessarily need to come to the market for that. Bruno, what's the average length of time between signing a partnership, getting the first sizable revenues from a new partnership? 12-18 months. Yeah, it depends whether there is a deal on the table. Sometimes those partners are already active in an installed base, in one of their installed base customers. It may be a net new opportunity for us. Sometimes the customer or the prospect may ask for us to collaborate with their incumbent, and that's absolutely fine. We happily do that. So they are probably the cases where it may run faster, but to source your partners, to recruit them, to train them, to onboard them, to do the joint marketing, you are definitely 12 months down the track. But we are starting to see revenues coming through, and that's the encouraging side. When we look at the relationship like Guidehouse, we've consumed our first deal. That project is moving very, very well. It's aiming for go live, so that's good. We have other opportunities now in the pipeline. That's good, because if it's just a single deal, then you need to continue to recruit new partners. But the trick on the channel partner side is that you get multiple opportunities per partner in the pipeline. We have a good partner for instance in Austria. So long-standing partner. They've probably got 20 plus joint installed base customers. They have multiple opportunities on the pipeline at any point in time, and that's really what we want to do. And there's a question about management stake in the business and your biggest shareholders. I saw you flicking through the paper, so I think
sure. Yeah. So I guess the biggest shareholder is a family trust. They have a representative on the board. So as a result of that and other shareholding, myself and my fellow directors takes us over 30% for the management element. For institutions, as a result of the convertible and bringing a couple of new institutions on board, that's taken the long-standing interest from the likes of Herald and Canaccord and Line Trust, who are still with us. That's taken the combined from institutions to nearer 20%. So those are the biggest shareholders. We also have a number of shareholders who go back to when we floated back in 2001 and have been very supportive throughout.
Another question from Bruno. Staff costs grew circa 400. I assume that's 400k last year. Do you expect something similar next year, or do you plan a step up because of you entering an expansion phase? Andy, you want to take that one?
Yes, I would expect it to be a little higher. We took on 2 extra people last year, a couple of developers. This year we're projecting more like 3 or 4, and the same the year after. And so do expect that to be higher. And I guess we, as Klaus has said, we've obviously put ourselves in a much stronger position cash-wise for us to do what we need to do resource-wise.
Question from Simon. Would insurance cost reduce the cost if a company uses you? Any idea? I'm afraid, Simon, I don't know. I'm not really an insurance expert, so I'm afraid I can't use I can't answer the question. Andy, last one I'm going to pass on to you. Will any placing be earnings per share enhancing? Question from Ian.
Well, presuming the placing is for us to make an acquisition, then I guess it's going to depend upon the nature of what we're acquiring, and I guess the hope would be that we would be identifying targets that were earnings accretive, but we will need to go through the systematic process of a long list and short list, and what that brings to us in terms of our offering and why is it we're buying a particular entity. So. Watch this space. We've got the expertise on board to go through a proper process. We need to get that first acquisition right, as somebody else has observed. That it is not a given. There are far too many acquisitions that fail for any number of reasons. As always, it's very important to get the first one right, and that will be dealt with in the round.
Right, we got another question from Barry. What's the FY22 order book look like compared with previous years? Any Fido-based orders booked yet? Andy, you want to answer the first part and I answer the second part?
I quite fancy the other way around, but anyway,
okay.
the order book is continuing to grow, albeit what we've done management rate wise, we're now working with the US dollar rate of 140. So it's not that different year on year as a result of being at 140 rather than 130. What I would add is that my chief exec is relatively cautious in putting opportunities in the order book. He tends to, particularly on the large ones, prefer to let it gradually evolve through the cycle to being closed and then put the full value in towards the end. So if anything, our order book is likely to be understated.
I'll take the second part. I'm afraid, Barry, we've only just launched Fido in V12. We have a pipeline of opportunities that's starting to emerge, which is good, both in our existing client base as well as potential net new prospects. And there are some really interesting names coming through. But I fully expect it's going to take another 6 to 9 months before we see any progress with those. So by the time we come back in November, maybe, Barry, I've got an update for you on that specific question. I think we've cleaned the questions out.
Klaus, I'm going to jump in. I suspect I might keep you here till 9 o'clock if I don't. So thank you both for being so generous with your time, I'm sure. And thank you also to the investors for taking the time to submit those questions. Perhaps I know investor feedback's important to you guys, so I'll shortly redirect investors to provide you feedback, but perhaps I could ask you for a few closing remarks before I do so.
Yeah, so a couple of final words then. We're still dealing with the effects of COVID as witnessed by our strong US performance, but somewhat muted rest of world revenues. But we're well prepared for the markets opening up. We've delivered 6 halves of growth in all areas. We've retired the low node. We've added new functionality like Fido and mobile authentication. And we will be addressing a much larger target account market. We have a highly committed and loyal team of colleagues, who day after day, I think, deliver the best code in our part of the industry. And we aim to deliver that sustainable revenue growth and profitability. We've had an encouraging start to the year. I'd like to thank you for attending. We look forward to updating you again in November. So thank you very much.
Class, Andy, thank you very much indeed. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of Intercede PLC, I'd like to thank you very much for attending today's presentation. That now concludes today's session. Good afternoon or early good evening to you all.